welcome back to the Ace of Trades YouTube channel. My name is Tanner. Thanks for coming out with me today. I know I said I was going to be uploading a video on Wednesday. I decided to bring another one out early just to go over basic call and put options. I've been seeing so many people asking questions in the comments about Robinhood not allowing spreads. You can't do call, put, debit spreads. And also people just asking me to go over the basics. Obviously, my debit spreads videos are for people who are already past learning about call and put options. So I wanted to just take a step back because I am creating playlists. They're all public for all of the different videos I'm making. I made one today and put all of the ones going over debit spreads so far in that playlist. So if you want to check that out, they're all in one spot for you. As I upload more videos, that'll make it easier for you guys to find what you're looking for. But anyways, I just wanted to go over this first. A ton of people have been saying that they can't figure out how to do spreads on Robinhood. Just come into your settings and come down to options trading. Now I'm using the Windows version. I like using Robinhood on Windows. I do use my app just to check things, but I don't usually change any of my settings on the app just because I like having it on Windows. But it's pretty much going to be the same thing. You're going to come down to options trading, and you can see I have level 3 options trading turned on. Now Robinhood only has level 3 options trading. Other platforms, brokerages like Webull have level 5 options trading, and there's a whole bunch of stuff that changes with that. But to do spreads, you need level 3 options trading. And if I click on remove options trading, you can see, are you sure you want to remove options trading? Remove options. Or actually, I'll click on level 3. You can see it says buying calls and puts. That's level 1. Selling covered calls, cash covered puts, exercising options, and buying and selling spreads. That is what you get on level 3 options trading. And it's not going to give that to you right away, especially if you said when you first opened your account with the brokerage that you don't have a lot of experience. It's only going to put you on level 1 or even level 2 if you say you want to do options trading. So what you have to do is you have to go and check to see what level you're on. Request, I believe that's how it was when I did it. Now obviously I can't check anymore because I don't want to have to re-request if that's how it works, but you do have to go in and request to have level 3 options trading whenever I did this, and basically you have to go out there and make some calls and puts, do some small trading with options, and once you have some of that in your account, then they will upgrade you to level 3, and that usually takes about 2 weeks from what I've seen. That's what it was around when I started, and I think it's still like that from when I've checked forums and stuff like that. So just wanted to clear that up. I cannot be answering all of those comments. It's not that I want to, I just can't keep up with them. People asking me how to do level 3 options trading. So this is how you can do it on Robinhood. But from this point forward, I won't be commenting and telling you guys what to do just because I don't have the time for it. But I really wish I could go through each one of those comments just to have a conversation with you guys. But I really enjoy the feedback I've been getting. But anyways, let's go into, let's just pull up SPY, and we're just going to go over some calls and puts. We're going to lay down the basics. So first of all, what are call and put options? So I open trade SPY options. You can see I have all of these different expiration dates, and depending on the company and the brokerage, you're going to have a variable amount of dates. If it's a smaller traded company that doesn't have as many expiration dates, you'll know that the volume isn't really there. For something like SPY, there are tons of expiration dates, and that is something that can be really useful because if you have a strategy that works really well for you, you can set a lot of different options on different dates. So right here on the top left under SPY buy call, you can see that I have buy and sell, and I have call and put next to my expiration dates. So when you are buying a call option, I'm way over the price. Let me get back down to the price. When you're buying a call option, you are paying a premium. As you can see here, these are the premiums on the right side, listed with the $sign. You have to pay a premium to reserve the right to buy 100 shares of SPY at that strike price if it's over that strike price on the expiration day. So say I buy a February 12th call option for the $392 strike price. So I'm going to add that there. As you can see here, it says it's a long call. So that's a call. And when you select that, you are paying $154. I know there it says $1.54, but remember, this is the right to buy 100 shares of that contract if the share price is over $392. So everything is multiplied times 100. So if you see here, I buy one contract, that's going to cost me $154. And it's the exact opposite for a put. So if I cancel this out and I select puts, you are bullish, or I'm sorry, you are bearish on the stock. You think it's going to be going down. So I'm going to pay $167 to buy the $389 strike put. So I am believing that this share price is going to go down. But I just wanted to clear something up with you guys. I've also been getting questions about exercising your options. Most people who are into short-term options trading usually aren't even executing their plays. They're just trading the premiums that you have to pay for the right to buy those shares. So as you can see, the puts above the share price are going to cost more because the share price is going down. It's going farther away from those puts. Puts is basically betting on the share price to go down. And likewise for the calls. As you can see, it flips. Now all of the higher costs of the premiums are below the share price. So if you buy the 392 for 154 and SPY moves up a couple dollars, this might be worth something like what these guys are worth right now. So instead of actually exercising the options, you're buying this contract for $154 and you're selling it to someone else later who thinks that's still a good buy, and you're putting it out into the market and you're selling it for maybe $220 for that contract. So on this channel, I will not be exercising options.
And this is something that I live by.
I am trading the premiums that are traded on top of the share price for the right to buy shares. So if that makes sense, I hope that you're confident that you can, go out here and make some wise judgments and make some money for yourself. And hopefully you can learn and discover different types of strategies that you like to use. Obviously, if you've seen my videos before, you know that I really like debit spreads. So if you can learn call and put options, if you can get everything down, debit spreads are not very hard to learn. They're not very hard to understand. And then I would recommend going to my playlist that I just made today and looking at all of those debit spread videos. And I'm going to have playlists for all the different types of strategies I'm going to be working on. Right now I am studying some covered calls, and I'm really excited to get into those. But anyways, I wanted to just go over some of those basics in this video, just to clear up a few of those things. I know I talk slowly and it's really easy for me to make a 10-minute video, but I think that coming from an amateur that understands this stuff, I'm not going to be trying to pitch you guys some type of course or anything that's going to be a waste of your time. I'm just an enthusiast, and I am confident that I really understand this stuff, and I just want to share my experiences with you. So if you have any questions, you guys can find my business email in my page. Shoot me your questions if they're a little cumbersome, a little too much for YouTube comments. I'm trying to get back to you guys, and the next video I'm going to have about just standard call and put options. It's going to be going over the Greeks. It's going to be going over how time decay and volume and volatility impacts the price or the cost of these premiums. So that is going to wrap it up for this video. I know I didn't go over a ton of things, but I just wanted to have another video where you guys can hear me repeating this stuff over again. And I know I might sound like a broken record, but the easiest way to learn this stuff is to hear those words and to see what's going on over and over again, and just to really get that repetition going. And even if I come out here to some of these longer term options, you can see the longer you go out, the higher chance that SPY is going to be going up. As you can see now, these cost a lot of money. This is July 16th, so now these calls are going to cost around $2,000 for a contract. So we're going to be going over a lot of different ways that you guys can buy options. I know I said in my very first video that I don't like using call and put options, but that was kind of a lie. I'm really trying to start to get into buying long-term calls and puts, and just letting them sit and grow. And I'm really excited to get into all that stuff with you guys. So stay tuned for the video about the Greeks, and I hope you guys enjoyed. Let me know your feedback in the comments. Please like and subscribe, and we'll see you next time. Thanks.